Hi everybody, welcome to yet another episode of Sunday with the StaG. Today with me is Mr. Dhiraj Sinha. Dhiraj is a Bangalorean and IMC alumni of mine, 11 years senior to me. Dhiraj comes from an IT background and has been a very active person in the market for the last few years. Me and Dhiraj know each other for a few years now and we interact up quite a bit on markets. With all this storm in the market, me and Dheeraj thought, let's connect and record a session for our audience. Dheeraj, before we get on to this, a quick intro about yourself for the audience. While the IMCians will know you, but there are quite a few of our non-IMC audience who will want to know about you before we get on to discussion. Over to you, Dheeraj.
Great, great. Thanks and a very warm welcome and happy Diwali in advance to all your viewers. And thank you for inviting me on your platform. So it's always a pleasure to interact with you and talk to you and hear your views in the market. So while I'm senior to you in IM Calcutta, when it comes to the capital markets, I'm much junior to you from that perspective. So always great to talk to you and take your views. So a little bit about myself. After graduating from IIM Calcutta, I got into IT industry and then continued there, but mostly was involved in the banking, capital market, financial services firms, and providing different sort of IT services to them. Uh, Managing a fund was always a dream while in college. It didn't happen for various reasons, as you know. So after essentially working for many years, uh, I got more active in the stock market, capital market, and particularly in the FNO segment. So that is something which I really started enjoying and have been very active there and planning to launch a fund which is more focused on leverage strategies. So that is where I am. And I think this is the right time when we are meeting and talking. Market is uh, just 1 month back, you would have asked someone, then nothing seemed to be going wrong for the Indian markets. And every time we say this time it's different. So that was the raga which everyone was uh, talking about, that liquidity is strong, retail has come out as the third big Mahashakti and all that kind of stuff. But now we have seen that the markets from the top, particularly the uh, our benchmark Nifty has fallen more than 8%, and some of the mid and small cap have seen a much larger cut. So in that context, I think it's a very relevant for our viewers to understand your view, Mridul. And I would like to say that, the sentiment really seems to be down with all the fall. And every day, people who are used to waking up in the morning and seeing their portfolio going up 1% or two almost every day are in the reverse. You open your screen, you see all the red, and you close. So, what do you think? What has happened? Why do you think we are in this state?
Dheeraj, let's not be modest by a percentage or two. We both know of quite a few people who said हमारा portfolio तो रोज 5% ऊपर जाता है.
I
So,
know.
so yes, markets. The first thing first, Dheeraj, it's been nearly 30 years since I've been seeing markets. I've been, you can say, lucky or unlucky. I really don't know, but I've seen markets falling on its head whenever people thought it's a easy money in the market. So markets has its own ways to make people realize that reality is a reality. Come back to this last 1 month has brought that back. Has it really moved the conviction of smart or intelligent investors? The answer is no.
Right.
It has obviously hit people who thought easy money or traders more
Mhm.
hard. And unfortunately, whether it is media, whether it is our WhatsApp group, people are more swung by easy money and traders, and they are not prepared for the risk management. So anybody who has not done risk management has fallen hard in this correction.
Mhm.
But is this correction new? The answer is no. Forget about going multi years back. We did a quick report and we saw that over the last 5 years also multiple times market has corrected by 10% or more.
Correct.
So that's a natural phenomenon of the market, I believe, to
Mhm.
shake out the fraud, the easy money, and bring reality check. So what we are seeing is nothing but a reality check according to us.
Okay.
The reason for the reality check may vary from case to case, time to time, but nothing else. It is a reality check. Now, barring interest rate, as in the FD part of it or the GSEC part of it, nothing goes a straight line.
Mhm.
No career for a film star, for a cricketer, for a businessman can't be a straight line. So a career of an investor also can't be a straight line. Has to see its ups and downs.
Yes.
These ups and downs helps you to become a better investor and take a relook at your own strategy. And those who can do that smartly are the ones who survive and make big money on the market.
Hmm.
So this, I call it a healthy correction. While it has brought pain for everybody, even our AIF investors would be seeing a drawdown to their last month's returns. But trust me, it's a healthy correction. That's what we look at.
Great, great. But do you think it is all about liquidity, or there are some macroeconomic factors which are supporting this down move, or is it only valuation? So if you look at liquidity, valuation, and the macroeconomic factor, where would you put your finger on the reason for this downside move that we are witnessing?
So liquidity plays an important part because ultimately price discovery is demand and supply.
Mhm.
So, so if macroeconomics is bad, but if liquidity is high, then the markets will not fall immediately, but they will reset itself. So the pace is driven by the liquidity, but I think the direction is driven by the news flow, which is macro and micro. So, so what is the macro news? As we covered in a report, recent report, the macro news what triggered by the Middle East actually is a multiple factor. There is a macro on Middle East side, which is geopolitical in the nature. There's a macro with the US elections where the large funds will want to be risk averse, which is why if the market is going down, also they don't want to commit and wait and ready to wait for a week or two. The macro factor remains is the kind of upside we saw in China led to a bit of short, I will say, a short covering in China and India long China short trade unwinding happening. Add to that what is happening between India and Canada would have led to few Canadian funds getting their exposure down in India. We have seen that across multiple times again on the macro basis. So these are the broader macro points. I think there are equal micro points. If you look at the fact that, as you rightly said, a month back everybody was on the market. So everybody believed कि market तो ऊपर ही जाता रहेगा. ठीक है. While market will keep going up on a 6 months, 3 months, 9 months, or a year period, but it can always correct on a weekly, fortnightly basis, and that is what is happening currently. And it is not the first time it has happened. It has happened in the past. This time the magnitude is more, the pain in mid and small cap is more. There is a micro reason for it. Mid and small cap ran much ahead of their valuation, and there was one way liquidity there. Now, with smart funds, smart investors saying that there is no valuation comfort there, pulling the money out even if they are correcting, which means creating a desperation selling from the liquidity perspective. So it's a combination of macro, micro, and liquidity as a combination. Uh, Personally, I think, did I envisage such a steep correction of 7-8% in a month in the market? I will say that no.
Mhm.
So the magnum is a function of liquidity because everybody will want the events to be over.
Right.
And you are a trader and a fairly long span of time you have done trading, you will know that traders typically go by the momentum and texture. So with momentum and texture moving away, traders, hedge funds from being long would have become neutral to negative. So until there's a bulk of long-term money comes in the market and take a support, even the trader community will not move long.
Correct.
So so we need something which will bring investors back, and because of it, the traders will also start covering their short. So which is what we tried to explain in the report, that that can only happen when there are certain parameters which we see, which is market getting light at a retail level, and certain technical parameters which we follow have to turn positive for everybody to start being talking positive on the market. Just to re-highlight from a 6 month perspective, we have not changed our view for whatever had happened over the last month.
Mhm.
We still maintain that by March we should be at 30,000 on Nifty.
Wow. That's a wonderful news, and I'm sure that many of our viewers will enjoy hearing that number, right? Uh, Technically, if you ask me, because I do a lot of technical analysis and also hedged kind of strategies, I clearly see that we are reaching important support in the uh, in Nifty, for example. Bank Nifty has been stronger. Of course, if you look from FNO perspective, this change which is going to get kicked from 20th of November because of the SEBI regulation changes, one will have to watch that what happens on the FNO volume and the liquidity, etc. So that is one unknown. But barring that, if you look at it, we are reaching some very important support, and someone who buys some hedge. So while most of the time people get into trading and speculative activities when you talk about FNO, if we look at the genesis of FNO, it was meant to hedge the portfolio. And this is a great example, a time when someone who would have hedged the portfolio by buying certain put, and that can be long dated put, right? Let's say March expiry now, you can still sleep peacefully because you know the downside risk on your portfolio, right? Having said that, even if someone has not done that, clearly, if you look at the technical charts, many good stocks are coming at very, very important support levels. The second thing is, and I would like to hear your view also on that, if you look at it, there was some sort of a discrepancy in the market, the way the small and the mid caps were running versus some of the very large names were running. So, for example, your HDFC Bank or the Reliance, or even banks like, say, ICICI Bank, etc. So, top 10, for example, if you look at Nifty, they had not done as well as rest of the markets. So, going forward, do you see some of that changing? People moving from small, mid to large cap and drawing some comfort there. And since you are largely a large cap focused fund, it would be very interesting to hear your views on that allocation part and movement from one market cap to the other one.
So you covered many a points. I'll address those smaller points one by one.
Mhm.
So the first point first on the banking and the performance, and now banks looking better. I think for whatever is happening in India, while I don't want to blame somebody, but I think a lot of that is happening because of media. What happens is what we see on a day-to-day basis is what is portrayed to us. And media fundamentally has become a very regency bias. So जो दिखता है वो बिकता है, जो चलता है वो दिखता है वाला part I'm trying to explain. When last quarter banks reported low growth on CASA, there was enough media articles on how stock market has taken the CASA away and everything. But the fact is that smart asset allocators don't take their FD money out and put in the market on high risk. A segment of the market does that, and the market automatically corrects them and throws them out of the market. Asset allocation, risk management is the core of finance, right? Though if you don't follow it, there will be aberration for a couple of quarters, but structurally things will remain the same. We reiterated the fact that banking might face CASA issues for a couple of quarters, but that's not a challenge for banking. And this quarter numbers, the CASAs are better. And credit cost is the issue with MFIs and high risk loans, while while for those who are doing traditional banking, even credit cost is under control. Dheeraj, we have maintained that during last quarter also, that now the banking sector will see the difference between the men and the boys. I think that same thing applies, that now we will see the difference between men and boys when it comes to the companies and the corporates across market cap.
Right.
So the probability of losing money in large cap is very low. And hence, with this volatility coming in, it's natural to expect investors to move some part of the money from high risk to moderate risk, which is
Mm.
large cap. So yes, some asset allocation should be done, would be happening is what I see. The other thing I want to highlight is, I think it was 6 months back, we came out with a report on the banking sector
Mhm.
where we highlighted that how the market believe that the traditional banks, the large banks, are not where the money will be made, and people will make money in the smaller banks. But in a cycle, ultimately banking makes money only when you can do the growth with the right credit cost, which is where the ICICI Bank, the SBI, the Axis Bank will survive
Hmm.
more than the smaller banks.
Right.
So, so nothing against anybody, but look at the numbers of IDFC Bank and IndusInd Bank.
Hmm.
Because of the scale difference between the larger banks and these guys, one segment of lending created a pain and the profit survived.
Right.
And you as a minority, I really don't know. So IndusInd Bank, something which I had raised few years back.
Hmm.
Forget about that. IndusInd Bank 1500 था एक महीना पहले.
Yes.
The kind of numbers they have reported, I really don't know when I will see 1500 back in IndusInd Bank.
Hmm. Hmm.
So and the same thing happened with Infosys a year and a half back when they reported a disaster number. It took more than a year for Infosys to come back to that price.
Correct. Correct.
There's a time value of money when you are investing. This is not a so you need to pick earnings as the most important factor.
Hmm.
I think this correction will bring the market back to focus on earnings. So the asset allocation has to be on the lower risk asset side, but more importantly, has to be on where the earnings are coming. If you can, with high conviction, if you can find pockets of a small and mid cap with your due diligence and deep research, you can make money there also. But if you want growth with protection, large cap is the place you need to.
Yeah. Yeah. So it's coming back to the fundamentals, which is bottoms up stock picking, look at the specific company. So while a sector such as banking has
Hmm.
not done great, and many people think that may catch up, it is not a blanket statement, because one bank performance could be very different than the other bank performance, and that is where I think the value of deep research, the kind of things that you are talking about, that comes to the fore, because that's not a blanket thing that I will just blindly go and put in the banks. Which bank in the segment becomes very important, right? So let me just change from banks. So you talked about banks. Uh, the recent results that have come have also shown some concerns coming from the consumer discretionary, right? And in some cases, even essential. For example, Unilever was really struggling, right? We heard the Nestle CEO talking about that he sees the middle class not expanding or rather shrinking. So, what is your view on uh, on two things I'm talking here? One is uh, the segment which is consumer segment, right? Because traditionally that has commanded high valuation and has done reasonably well. So that is one. And the talk that there is really stress in the economy from individual household earning perspective, and the middle class and the lower middle to the poor section are facing tremendous stress. So would like to hear on both the aspects.
So let's touch consumer
Yeah.
first. Frankly, Dheeraj, for the last 1.5 years, we have not played I will say the essential consumer, which is the Daburs, the Levers, and the Nestle, or even the Page industry in the
Hmm,
portfolio.
hmm,
Because what we have seen is that over the last many decades, whenever an economy goes through a high inflation, people compromise on these क्योंकि उनका एक बजट होता है. So a typical Indian household works on a budget. The budget is कि मेरे को महीने का 15,000 में घर का राशन भी लाना है, साबुन भी लाना है, वॉशिंग मशीन का साबुन भी लाना है, टॉयलेटरीज लाना है, पर्सनल केयर लाना है. Budget might vary, but I'm just saying. Typically, what the levers and the Dabas of the world did is initially they started bringing the volume down. 150 ग्राम का साबुन 140 ग्राम कर दिए, 130 ग्राम कर दिए, instead of taking a price hike. So initially, the consumer didn't realize and they used to pick the same stuff. बट जो महीने का 20 तारीख को साबुन खत्म हो जाता है और आपको रीस्पेंड करना होता है, then you realize it. So the price hike the shortcut price hike way would be behind for them. So the guy will say कि यार ये 150 ग्राम का साबुन चाहिए, डाबर का नहीं अफोर्ड कर पा रहे हैं तो एक्स का ले लेते हैं, ठीक है. In a high inflation scenario, the Indian consumer doesn't end up spending the same amount on a toiletries or personal care, as in they don't increase the amount, they end up spending the same amount. So that's the first challenge these guys will face. The second challenge is that there are thousands of startups in India catering to various kind of segments. These startups are eating into the traditional market share of the players across industry. So that's a combination where just blank holding that the consumer is not spending is completely wrong. I think those who needs to be tactful or smart in their business strategies are the ones who will grow better than the industry. So within the consumer, we were playing it with United Spirits, which is a very high premium spirit. If
Right.
if I take this quarter a bit away,
Mm-hmm.
their growth has been pretty fine.
Mm-hmm.
And the other important point, Dheeraj, here is for you and our audience is we don't go by one quarter number. We believe a quarter number can be good, bad for many reasons.
Correct. Correct.
Typically, it's important to take at least two, if not 3 quarters, to take a view.
Mm.
So only when something does very bad for 2, 3 quarters continuously is when we get worried about.
Right.
So coming to consumers, I think everybody is fighting the same. When I say consumer, I mean the daily consumption part.
Mm.
Everybody, there are too many players for the same pie,
Mm.
and that pie is not increasing because of the increase in inflation. That's our observation, and that's something we have maintained at the portfolio level.
Correct. Correct.
To paint it and say that the consumer is not spending
Mm.
is not completely right.
Got it.
That's my first
It's
observation.
mainly the inflationary pressures
And
coupled with higher competitive activities
yes,
uh, is probably hitting those
yes.
conventional players.
So
Great.
so tea is, for example, let me
Mhm.
talk about tea.
Yeah.
I'm a tea fan. मैं जब जब when I do well and everything, yes, I want to have Tata tea, but I want a good tea.
Mm.
So I will compromise on tea if Tata tea is not giving me the same grammage or the same price, because there are local teas also which can be good.
Got it.
Similarly, so you as a household or we as a household compromise on certain aspects when the inflation is high.
Mm.
While inflation is not over the roof, but inflation has been high on consumption for India too, like global.
Correct. Correct. And that is where the propensity to experiment and look
Yes,
around that also because
yes. And in the world of startup where you get every new product on Blinkit and stuff around it online, you try that. So we have seen that in the garment industry.
mm,
For example, retail is struggling, but trend is doing well because one product of theirs have ended up going above the roof. So it's not that the consumer is spending, the consumer pattern has changed where
right.
you need to be good for people to have a structural demand.
Agreed. And that brings to some of the innovators. So we know that in your past videos and research, you have talked your bullishness on Zomato, right? How do you see some of the other players in the digital space, things like Paytm or Policy Bazaar, for example, or even Nykaa? So any view on this segment, or is it very specific to Zomato? Or you are bullish on the overall uh, new age companies, and with the Swiggy coming for the IPO, right? There's a lot of interest, and since I come from alternatives, right? I mean, there's a lot of activity on the unlisted space. So, would like to hear your views on that.
Okay. Very quickly, I have not in detail, but I have looked at both Nykaa and Paytm.
Mhm.
Why I have not looked at in detail, one thing about me, Dheeraj, is I do a broader look first. I
Mhm.
spend maybe a first couple of hours to look at parameters which are close to me. And I do a real deep dive work only when I get excited of after that couple of hours.
Right.
So for whatever deep dive work or understanding I have in Zomato, I will not have the same on others because I've not gone
Fair point.
ahead and done that because I was
Yep.
not excited about.
No, no, fair point. Yep.
So coming to Paytm, what didn't excite me
Mm-hmm.
is the fact that while it was into too many businesses, beyond the point there was no USP about it.
Mm.
Second is none of the businesses contributed more than 10% to the revenue,
Mm.
which means I need to have a grip on at least 5, 10 of the businesses to make a view.
Right.
Okay.
Right.
So that as a combination doesn't excite me as an investment strategy, which is where Paytm fell apart.
Mm. Mm.
Coming to Nika, there was some pressure, peer pressure or stuff to look at Nika, and I did have a look at Nika.
Mm.
And one learning which I had from Nika, and luckily I didn't went overboard on it because I didn't. So I didn't like the business because there was no entry barrier USP.
Mm. Mm.
So these are the ticks I've seen in Zomato, and which is why I stick with Zomato. And the other thing which I've learned and is I'm coming from the background which I have with certain understanding on investment banking and capital raising also. Not a direct experience, but a fair share of understanding is IPO numbers पे देख के तेजी नहीं करना चाहिए. There is a lot of padding which happens. Front ending of revenues, front ending
Right.
of margins.
Mm-hmm.
You want to package. So for a joke, the way we groom for our marriage, whether it's a
Mm.
man or
Correct.
a girl, that's way different from our normal
Real
grooming,
self.
right? IPO is the marriage of the company with the
Got it.
investors. So
Yeah.
they would
Very
prove
rightly
well
put.
for it, right? So the learning is don't get gungo about any IPO in
Right.
terms of asset allocation. We being a concentrated portfolio, we need to take a good bet if we have to.
Mm.
And what happened with Nika post IPO was clear. And I think that's the fear which I have for both Ola Electric and Hyundai
Mm.
and partially in Ola Electric we are seeing. We as a minority can only make money if we can avoid mistakes. That's what I
Agree.
believe. The first rule of investing is not to be right. The first rule of investing is not to be wrong.
Very rightly put. Great. So with that, I think we have covered quite a range of topics. Any final word to the investors before we conclude this?
So, so the only point I will highlight to the investors is correction is your friend. You should look to add in correction if your conviction is the same.
Mm.
I will take back investors not much. A couple of years back, I think it was around mid 22
Mm.
when we were cautious on the markets for valuation. That time, one of the theses which played out is that when investors don't make money in absolute term for a year,
Mm-hmm.
they be start thinking FD is better than.
Correct.
With this correction, 4 महीना पहले का पैसा भी पार पे आ
Mm.
गया आप.
Mm.
So so जो extra fraud quick money वाला पैसा है वो निकलेगा system से. That liquidity will be off,
Correct.
and that pressure is what we are seeing now.
Mm.
But if earnings come, which I believe you will see a gungo earnings from January onwards,
Mm.
I've explained that across multiple of my write-ups why I believe so.
Right.
And so this money will come back. Secondly is, as from my mentors, people who I have followed, people who I've read about, though I have made humongous money in the market, only those who have not looked at quarterly results.
Mm. Correct.
PEs. PEs make 10, 15x on the bet they go right. Do they worry about quarterly results?
Yep. They
The
don't.
answer is no.
Obviously. Yeah.
Yes, there will be a bear zoo, there will be a stuff around it also. But the point is that when you go right, you make real big money. So, so the one aspect which I've learned about investing is pick your bets for 3 years, 5 years,
Mm.
and don't worry about one quarter over.
I
इंडिया ने
think
आज 6.5% ग्रोथ किया या 5.5 किया, इन्फ्लेशन 5 की जगह 6 आ गया, ओवर थिंक करेंगे तो मायोपिक रहेगा.
yeah. Great. I think that's a great advice. And, I would say to the investors that don't forget buy the dip. We were all talking about buying the dip, and that was working. Only difference is when you're buying the dip, it cannot be random. It has to be based on the research and the high quality names,
Well
right?
said.
So as long as you ensure that you've done the research and high quality name, otherwise you trust a fund manager like Mridul, uh, and they are doing the research. So with that, we'll conclude and wishing everyone once again a great Diwali and a very happy money making year ahead. Yeah,
Wishing the same from my side also. Thank
great.
you everybody for
Thanks.
listening us. Thanks Dheeraj bhai for a quick chat.